I look for a severe recession in the U.S., really global, because your question was how's the global outlook? Is pretty bad. Maybe something closer to social unrest and riots in Europe, and then on top of that, possibly a global financial liquidity crisis worse than 2008.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. The global economy is stumbling, and not just for financial reasons like the increasing cost of debt. Supply chains remain compromised. We're still having material challenges in both producing and distributing real physical goods across our oceans and continents. This is such a serious threat to global prosperity that best-selling author James Rickards has made it the focus of his new book, Sold Out: How Broken Supply Chains, Surging Inflation, and Political Instability Will Sink the Global Economy. What are the biggest looming risks we need to be aware of, and what steps should we, as both consumers and investors, take? For answers, we sit down now with James Rickards himself. Jim, thanks so much for joining us today.
Thanks, Adam. It's great to be with you.
Thanks. Look, Jim, I got a ton of questions about this great new book of yours. Real quick, though, let me just toss out the normal starting question I like to begin these discussions with. What's your current assessment of the global economy and financial markets?
Sure. The global economy is weakening very quickly. That's backed up by a lot of metrics. Most recent data out of China indicates they're on the brink of a recession, if not in a recession, which is kind of shocking considering this was an economy that grew at 10% compound rate for about 30 years. Then that sort of 7% became the new 10%, and then 5% became the new 7%. But now they're close to zero. They lie about their numbers; they're not reliable. But you can get something out of it. There are other private sources of information that show the same thing. So their growth is close to zero. A lot of reasons for it. The real estate meltdown, the COVID lockdowns, which are probably as much political as they are medical. There's no medical sense to them whatsoever. You should just let people get herd immunity. That's how Europe and the United States got past the pandemic, but China has not. But they're continuing to do that. Decoupling from the United States, demographic implosion. So China's a mess. Europe's not much better. They're, again, right on the border of a recession right now, according to a lot of data, but they're going to take a deep plunge almost immediately as I guess they've had a little bit of a mild spell in Europe, but the cold weather won't be far behind. I actually watched the jet stream. Often the jet stream is kind of straight with a little bit of a wave, but every now and then it goes meridional, which means it's really wobbly. That means that's how these cold Arctic blasts come down into, it could be the United States, North America, or Europe. It looks like that's how the jet stream shaping up. So you look for a bitterly cold winter in Europe. Their energy is depleted. You hear the happy talk from the EU leadership and others. Well, Germany's reserves are almost 100% full. Yeah, but what they don't tell you is that the reserves are only 20% of what they need. So you got 100% of 20%, which is 20%, at least where I went to school. No new supply coming in. Latest information, I had always pointed to the U.S. as being behind the sabotage of the Nord Stream pipeline. But when I say U.S., I kind of put U.K. in the same breath because they work together. The latest information is that it was actually a UK operation, obviously with the blessing and the support of the United States. Just gave us a little bit of plausible deniability, but not much, because the UK, as I say, they wouldn't have done it without clearing it with us. But what that does, it takes away Germany's options. If Germany decided they wanted to, make amends with Putin, or at least talk to Putin, get the natural gas flowing in exchange for easing up on arms shipments to Ukraine, et cetera, that door was open, but not anymore, because they took away Putin's leverage. Because even if Putin said, yeah, I'll give you more gas, he can't do it, at least in the short run, because the pipeline's blown up. So that was almost like the U.S. declaring war on Germany. I mean, something we've done before a couple of times, but that's just sinking in. But people talk about liquid natural gas. Was a big story a few weeks ago. Well, that the European Union had signed a major liquid natural gas deal with Qatar, which is a major producer. So I looked into it, and it's like, yeah, it'll come online in 2026. Basically, the Qataris, who are no dopes, who are getting the Europeans to fund the build out of the infrastructure in a new gas field in the northern part of Qatar, which is, peninsula. Yeah, so 2026. Well, good luck getting from here to there. That sounds like 4 years away. They're not going to make it through 4 months, and that's the point. The government was handing out checks, beginning with Trump in, I believe it was June 2020. Everybody got that one was a $1,400 check. And then in December 2020, at the end of the Trump administration, everybody got a $600 check. And Biden comes in February 2021, not to be outdone. He hands out, I think, a $1,600 check. So everybody got a check, like 2 or 3 of them. And a lot of younger people opened accounts on Robinhood and started trading Bitcoin. That didn't work out too well, but a lot of people saved the money. But there were very definite spikes in retail sales coming within 30 days of the checks. Well, that's not surprising. I give people free money, they'll go buy stuff. And that kind of kept the economy going. It wasn't a real boom, but it looked good. But we're not doing that anymore. There's no more checks. And so you had a lot of people who lost the habit, a lot of people staying home, watching, maybe the World Series or whatever, eating Doritos, but they're not working. A lot of people out of the habit, but they just got used to government handouts. Not everybody, but some. And the other problem is, because people say, wait a second, how can you have low labor force participation when everywhere you look, there are help wanted signs, which there are. I mean, right. McDonald's is paying $35,000 for an entry level like cashier or hamburger, maker with benefits, training, and advancement. Well, that's pretty good for a entry level hamburger person. So there are and people call this a labor shortage. There isn't actually a labor shortage because we just talked about how you've got perhaps as many as 10 million, people between the ages of 25, 54 who are sitting home. But the problem from the employer's point of view, there's a shortage of willing workers.
Willing workers, yeah.
Not workers, but willing workers. Well, what makes you willing to work? Well, a raise, a good pay is one. As employers can't afford to pay the clearing wage to get people off the couch because they'll go bankrupt themselves. They're working on very small margins. Sales are declining, et cetera. So I'll pay as much as I can to get the workers, but it's not enough to get this person off the couch, so to speak. And so you've got this really weird situation. I use weird in the technical sense, where you have a huge pool of able-bodied, potential workers, but a shortage of willing workers because you can't pay a clearing wage. But that's more a reflection of how stressed businesses and how low margins are. And then you look at the big names. I mean, I guess Twitter is the most recent, but Amazon, FedEx, Target, they're all looking at big layoffs, and big layoff announcements coming every day. So none of which is good for the U.S. economy. But the Fed looks at unemployment, lower cost, lower cost, lower cost. It was kind of the Walmart model. So just-in-time inventory, everyone knows about that. But there's something called cross-docking. That's where a truck pulls up at a warehouse and you unload it. And instead of putting the stuff in the warehouse, you move it to another truck that then goes to a destination. The stuff never goes in the warehouse. Inventories are very expensive. They're costly to finance. You got to move the stuff around. It's called picking. Pick the stuff off the shelf with your. I used to drive a forklift, so I know a little bit about it. And put it on a truck. I used to unload trucks too. Hey, I've got 7 suppliers. Why don't I cut it down to 3 and do bigger contracts with each one and get lower unit costs? I've got 5 transportation lanes. Why don't I cut that down to 2? Get everything to Los Angeles and Seattle, as the case may be, et cetera. And they did it for 3, and they got costs lower, and Walmart and Amazon were the champions of this, but everyone else was doing it. But they missed something. What they missed was that while they were getting those unit costs lower for consumers, there were hidden costs, and the main hidden cost was you were creating greater frailty. This whole system was subject to a massive, massive breakdown. So, what happens if you have 2 suppliers and they both go on strike? What happens if you have one port of entry and it's backlogged? What happens if, you've got cross-docking in warehouses and there aren't enough trucks? There are 80,000. We need 80,000 drivers. 80,000 drivers. Wish they'd hire them instead of these IRS agents. But the point being, it is breaking down all across the board. Now,